so much for tuning into the trade setup. Okay, good morning and thanks so much for tuning into the trade setup. I'm Neeraj Shah. US markets were closed, but lots of cues. Let's take stock of all of that and then move on to our markets and then the stocks to watch. First up, treasuries and the US stock futures reflect the debt deal progress. Oil is edged higher as traders monitor the progress on the US debt ceiling. And there's a lot of to and fro. Wednesday seemingly is an important day from what I remember last, but there's a lot of talk. They're working overtime to ensure that there is no hurdle to this progress that they've seen. In other news, Qantas Airlines says that international flying will be twice as lucrative in post-COVID era. And if indeed the other airlines are also feeling that, then you've got to figure out what it means for some of the aviation stocks in India too, which are now doing large global operations. Interglobe Aviation, a case in point. But we're also seeing, that whether or not it listed it separate, but there's a rush for Air India flights as well, from what I gather from travel agents that I was talking to. Then China has rejected US requests for defense chiefs meeting at a key summit in Singapore. And as per US, that is indicative of the fact that China is not inclined to any kind of military conversation with the US. Now, like I said, US markets are shut, but the US futures were up. Let's bring up what the SGX Nifty might be indicating before we get to the trade setup. But I would suspect that there will be some optimism. Okay, it's a flat start, but I would suspect that the optimism stays intact. Let's wait and watch if it lasts. Remember, while I've been cautioning all this while, the markets have proven me wrong, and then experts are suggesting that it's this week is a week of some gains, or the possibilities of gains are higher. Nobody can really predict what the markets will definitely do, but the possibilities were higher. So what's the trade setup? To my mind, Nifty is checking along well, aided by banks and non-banking heavyweights like Reliance Industries, for example. The ADANI Group stocks are making their presence felt, and we might well see autos start to do that if indeed the auto sales numbers come May 1st or June 1st, excuse me, are optimistic or positive. There is the highest OI for Bank Nifty put options is at about 43,500, which suggests key support level. And don't think that Bank Nifty is too far out from there, and therefore it's interesting the kind of optimism that traders seem to have, or at least the put writers or the option writers seem to be having. Dealing rooms do suggest retail traction in midcap IT as well as infrastructure stocks. I was reading the notes from 3 dealing rooms and talking to 1 dealing room, and that the consensus seems to be around that, or the larger consensus seems to be that midcap IT is benefiting as well as infrastructure stocks are getting some traction. I do believe that you can see some bend towards rural beneficiaries on account of the IMD forecasts, which is talking of rains almost similar to last year, which is a positive, as well as lower input cost for some of the companies, be it two-wheeler companies, be it FMCG stocks, and the guidance and the commentary in the con call seems to suggest the same. So at least on the raw material cost or the input cost. So therefore, that's a positive for sure. It's a busy day for results. From an index perspective, only Adani Ports, but a clutch of other important names. There is Apollo Hospitals, there is Aegis Logistics, Prestige Estates would be important, as would be Mazagon Dock by virtue of the kind of moves that some of the sectors have had. I think people will be watching out for Lemon Tree Hotels again. The quarter numbers will be great. The question will only be on the commentary and whether Q1 also continues to be as strong, as well as stocks like Mankind Pharma, which had a fabulous listing and now imperative upon the management or company to deliver quarter after quarter to justify the kind of fervor that the stock has had. And then let's move on to the stocks to watch and try and figure out which are the ones that are likely to do well, not do well, as the case may be. I'll start off with the positives, if you will. So Heikel, the first stock on today's trade setup to watch out for. Revenues up 8.55% at 545 crores. But strong jump in margins, extremely strong jump in net profitability, 73.8% at 36 crores. I know Sajal Kapoor, who's been a guest on our show, keeps on tweeting about this at times. I don't think too many people anticipated this to deliver the kind of operational metrics that it has, considering what's happened to some of the other companies in this space. But good going for Heikel. I would suspect, maybe the numbers are slightly lower than estimated, by the way, that I don't know. But on the looks of it, the numbers seem strong and very likely that the stock would react. Now, ISGEC will certainly do well in the session today. Revenue is up 28%, EBITDA up 54% at 164 crores, EBITDA margins at 8% versus 6.67%. and net profit up 137% at 93 crores. Now, it all flows through, right? Strong revenue growth, 28% is strong. And then an even better EBITDA performance, 54%, leading to the strong net profit performance. The 137% doesn't seem to be an account of any anomalies. So extremely strong showing, very good quarter from ISGEC, and certainly could do well in the session today. So do watch out for this one. Do watch out for specialty restaurants. I thought the numbers would look good. 21% jump in revenues. EBITDA margins expand from 11.6 to 15.6. That's 400 basis points expansion in EBITDA margins. Net profit up 19 times, but that's also on account of a tax credit of 35 crores and a reversal of an impairment charge. But even if you strip those off, I would suspect that the numbers would still look good on the net profit front too. So line item by line item, specialty restaurants as well has had a terrific quarter. Just that the net profit numbers look extremely strong and buoyant and inflated on account of some one-offs. But be that as it may, it's a strong quarter. Very likely that the stock could react. Soba, well, not line item by line item, because EBITDA margins leave a bit to be desired. But remember, on most real estate companies, you don't necessarily look only at the reported numbers, but also look at the pre-sales and what they're guiding about FY24. And therefore, bear that in mind when you look to trade Soba, if you do. NBCC as well. It's a good quarter, no question about it. Good quarter. Revenues up 14%, EBITDA margins expand, net profit is not up 176% to be honest, but the reported net profit up 176%. But there's a net exception expenses of 4 crores during the March quarter, this quarter, which is down from the 72 crore net exceptional expenses in the year ago. So, you know, it looks 176% higher because the year ago profit was dented by this 72 crore item. Had it not been for that, I mean, and if you adjust it for that number, then the net profit jump will not be 176%. It could be lower. I mean, I don't know the exact number, it will be lower, but keep that in mind. And therefore, good quarter, not as strong as the net profit number is suggesting, is the point I'm trying to make. Torrent Power, I thought left a bit to be desired. So I mean, the numbers per se are strong, except for the operational metrics. So revenue is up 61%, but EBITDA up just about 10%, which is why the EBITDA margin is at 18.1 versus 26.5%. Even compared to Bloomberg estimates, a lower than expected EBITDA margin. And that's where the scarring is. And that's why, despite the fact that it's a net profit, large net profit versus large net loss, the Bloomberg estimate was 568 crores. They've come in at 483. So I'm not completely sure. I looked at brokerage notes as well, viewers, and one note suggested that the numbers were better than their estimates and therefore did well. One note suggested that they were a bit disappointed, and therefore I just thought, let me just go with the Bloomberg estimate, which is the consensus, and then try and tell you how the numbers or stock could do. Now, it could very well do something completely different, but from the looks of it, it may not have a very big bang uptick on the face of it, but I may be wrong here, viewers. I don't think I'll be wrong in campus activewear, and you won't be wrong either if you think that the quarter left a bit to be desired. Revenue is down 1.3%. EBITDA margins crack from 22.3 to 16.3, 600 basis points contraction in EBITDA margins. Net profit down or flattish, but that's because there is a deferred tax credit of 6 crores. Had it not been for that, the net profit also would have looked weak. Certainly not a good quarter. Adani Transmission, not a good quarter either. Though, I mean, you would say relative to what they did in the corresponding quarter last year, strong showing, but relative to Bloomberg estimates, a weak quarter. So revenue is up 12.9% at 3357 crores. The Bloomberg estimates were 3185 crores. EBITDA up 27.3% at 1203 crores. The Bloomberg estimates were 1715. And net profit up 85%, whopping 85% jump in net profit, 439 crores. Just that relative to the Bloomberg estimates was down. So I would suspect that the stock could open lower, but you know, there is a bit of a momentum in this group stocks because they were punished so heavily because of that whole Hindenburg thing, and therefore difficult to say what the stock would do today. I have a standard disclaimer when I talk about any Adani Group item that the group owns 49% stake in Quintillion Business Media, which is the owner of BQ Prime, which is the platform on which you are watching this. So do watch out for Adani Transmission today, both on Soba as well as Adani Transmission. I don't have an exact handle on what the stocks could do. KNR Construction, now I thought the numbers looked weak. There's a brokerage note which said it is better than estimated. I think it is Dollar Capital, which gave a first cut and said the numbers were above their estimates. They don't look above estimates, to be honest. Revenue's up 13%, so higher than estimated, but EBITDA lower. EBITDA margins much lower than estimated and much lower than the corresponding quarter last year. Net profit 147 crores, estimates for 585. So not the best of quarters. IRCTC, not the best of quarters either. I would suspect, again, a note on which some brokerages are saying that it was a good quarter. I can't figure out. Yes, the revenue numbers look robust, and it shows that the tourism season is well underway and should be benefiting almost all the others as well. But it could be interesting to see what the stock does in the session today. Uh, like I said, some brokerages believe the numbers were better than estimated. Even for Jamna Auto, some people believe that it's better than estimated, though I think it's a washout quarter. Look at that. Net profit was better, and maybe margins were better, but the revenue is 347 crores versus estimates of 623 crores. No reason for one to believe that the numbers were better than estimated, at least to my mind. NOSIL, weak quarter, revenues down 15%, 392 crores, slightly above what was estimated. EBITDA numbers slightly above estimated, net profit slightly above estimated, but overall the quarter looked weak. Now, you could argue that they are exactly in line with estimates, and therefore NOSIL may actually not react too negatively. RBNL, weak quarter, so that's the other one. And then when I looked at con call snippets, viewers, I thought Indigo Paint's quarter commentary looked pretty solid. The stock didn't react positively to what I thought was a good quarter yesterday. It was down about, it closed down 2%, but look at the con call. They indicated that April was exceptionally well and May is also strong. Growth in tier 1 and 2 cities was double that of other markets, and the management desires top line growth to be 1.5 to 2 times of industry growth. That's optimism, all right. So watch out for this. And another one which reacted quite adversely to my thoughts was Balkrishna Industries. Now, maybe it was because while the Bloomberg estimates were one, the smart investor actually anticipated Balkrishna to do much, much better. It didn't do that, and it corrected 8%. So my bad, because I thought the numbers were okay yesterday. But here's the Nomura view. They've downgraded the stock to reduce from a neutral. Target price is 2100 because of the reasons on your screen. Maybe back-ended recovery being the principal reason why Nomura believes that the numbers may not be that great. So let's wait and watch. A clutch of important conversations lined up during the course of the day today. You will hear the Goldman Sachs view on BQ Prime at, I think, 10 a.m. if I'm not wrong, on Talking Points. Sunil Kaul, he's the Asia Pacific strategist at Goldman. He joins in to talk about whether Indian markets can continue to outperform the regional peers. So be an important conversation to tune in today. A clutch of result conversations lined up as well. And of course, some very heavy-duty conversations coming up during the course of the week. We'll be talking to Mark Matthews of Bank Julius Baer. We'll be talking to Russell Napier. So a lot of global opinion for this week on BQ Prime. And of course, standard disclaimer, as we say, that for anything discussed, please consult your financial advisor before you try and think of any trades here at all, or do your own research. We are merely indicating what the numbers look like versus what consensus estimates were like. Thank you so much for tuning into the Trade Setup. Have a great day ahead.